Welcome to another deep dive. Today we'll be exploring the world of real estate investing
Right.
with a focus on multifamily properties.
Sounds good.
We'll be taking excerpts from the ABCs of Real Estate Investing by Ken McElroy.
All right.
So our goal today is to give you the tools you need to evaluate investment opportunities and understand those core principles behind successful real estate investing.
Right.
Maybe even spark something for your own journey toward financial freedom. Who knows?
Yeah, a lot of people think real estate investing is only for the wealthy.
Yeah, I can see that.
Like it's some exclusive club you need a golden ticket for,
Right,
or
right.
that you need some magic touch.
Yeah, I can see how people would get that impression.
Right.
But from what I've been reading in this book, that's not really the case, is it?
Not at all. McElroy debunks those myths right away.
Okay.
He says success in real estate investing is about smart choices,
Okay.
right strategies,
hmm
and having a strong support network.
Okay, so it's not just about luck
Yeah.
or having a ton of money.
It's about having the right people and making smart moves.
So he's saying it's more about strategy and
Yes.
hard work than just
Yeah.
being lucky or having...
It's not a lottery ticket.
Right.
In fact, he even tells a story in the book about how he acquired a $9 million property with zero out-of-pocket expense.
Wait, hold on. No money down on a $9 million property?
Yep.
How is that even possible?
Partnerships?
Okay.
He found investors looking for that exact type of opportunity,
Mm-hmm.
then structured the deal to benefit everyone.
So it's about leveraging those connections and finding people who...
Yeah, you find people with the same goals,
Okay.
and then you structure a win-win.
Wow. That's incredible. So even if you don't have a lot of money
Exactly.
to start with,
You don't need millions to get
you
started.
can still find opportunities.
Absolutely.
But I imagine even with the right partners, just jumping into any investment without a clear goal in mind is...
Yeah, that's a recipe for disaster.
Right.
It's
Yeah.
like setting sail without a map. You need to know where you're going,
Absolutely.
what you want to achieve.
Okay, so how does McElroy recommend approaching goal setting in real estate investing?
He has these specific goal-setting programs.
Okay.
They go beyond just financial goals.
Oh, interesting.
It's more holistic.
Okay.
They also make you consider personal and family goals.
So you're saying your real estate goals should align with your broader life goals.
Exactly. It's not just about making money. It's about creating the life you want.
So it's about more than just the profit. It's
Exactly.
about the bigger picture.
Yep.
Okay, so that makes a lot of sense.
Yeah.
And I guess that leads us to another important point.
Yeah.
Building a reliable team of experts.
Absolutely. You can't do it all yourself.
Right.
You need a good network.
So it's like building your own personal A-team for real estate success.
Exactly.
Yeah.
McElroy talks about the importance of brokers, property managers, contractors, attorneys.
So you need specialists.
Yeah, basically anyone who can bring their expertise to the table.
And I'm assuming that trying to do it all yourself could lead to some major headaches.
Oh, absolutely. There are a ton of moving parts.
Yeah.
Trying to handle everything solo would be a nightmare.
Right.
McElroy shares this cautionary tale, actually, about an investor who went into a new city and decided to skip building that network.
Oh.
They thought they could handle it,
Oh.
and it ended up costing them a lot of time and money.
So it really is about having the right people.
It's crucial.
Okay, so let's say you've got your goals set, you've assembled your A-team.
Right.
Where do you even begin to look for these hidden real estate gems?
Well, that's where McElroy's three-level market research approach comes in.
All right, break it down for me.
So level one is all about preliminary research.
Okay, so what kind of things are we talking about here?
Things you can do right from your desk,
Okay.
online resources, newspapers, business journals, that sort of thing.
So you can get a sense of potential markets.
Exactly. You're casting a wide net to see where the opportunities might be.
So let's say I come across an article that's really positive about a particular city's real estate market.
Okay.
What's next? Do I just jump on Zillow and start browsing listings?
Not so fast.
Okay.
That's where level two comes into play, getting boots on the ground and experiencing those promising areas firsthand.
Okay.
You need to get a feel for the vibe of the place.
So it'd be traveling to these potential hotspots.
Exactly. You're going beyond the data.
Okay.
You're talking to local experts, soaking out the atmosphere, seeing it with your own eyes.
So it's like dating before you get married.
Exactly.
You wouldn't commit to a property
No,
without getting to know the neighborhood first.
you got to make sure it's the right fit.
Right. And it sounds like you can really uncover a lot that way.
Oh, absolutely.
Yeah.
McElroy tells this great story about how he was scouting out Portland, Oregon,
Okay.
and the city's energy was completely different from what he'd read about.
Oh, wow. So the media portrayal wasn't accurate.
Not at all. It was much more edgy, youthful and vibrant.
Wow, that just goes to show you the importance of firsthand experience.
It can make or break an investment decision.
Absolutely. So it's about trusting your gut.
And your research.
Okay, so let's talk about level 3 then.
This is where you go beyond just listed properties.
Okay.
And you start engaging directly with property owners.
So you're basically building relationships and uncovering off-market deals.
Exactly. It was like an investor's treasure hunt.
Interesting.
You're looking for those hidden gems that most people miss.
Okay, so that's fascinating, but let's get down to brass tacks here.
Okay.
You've found a potential property, you've done your research.
Right.
How do you know if it's actually a good investment?
That's where McElroy's 5-step property valuation process comes in.
Okay, so walk me through this.
All right. So step 1 is verifying the property income.
Okay.
You don't just take the seller's word for it.
Right.
You need to scrutinize the rent rolls,
Yeah.
factor in vacancy rates,
Right.
and even explore potential additional income streams.
So you're digging deep to get a clear picture of the income.
Absolutely no stone unturned.
What if the seller presents a beautifully formatted pro forma document that shows a healthy profit margin?
Good question. A lot of people fall for that.
Right.
But McElroy says you got to be careful.
Okay.
Don't blindly trust those pro formas.
Okay.
He actually walks through an example in the book
Uh-huh.
where he analyzes a pro forma and finds discrepancies between the listed rents
Oh.
and what tenants were actually paying.
So it's like detective work.
Yeah,
It's
exactly.
making sure the numbers add up.
You got it.
Okay, so step 2.
Step 2 is all about verifying expenses.
So looking at every single expense category.
Yep, maintenance, utilities, taxes, insurance, the whole 9 yards.
Wow, so that's a lot to keep track of.
It is, but it's crucial.
What are some common pitfalls to watch out for?
Oh, well, McElroy actually uncovers some hidden costs in one example.
Oh.
Things like potential property tax increases or even unpaid bills from a laundry service provider.
So even small details can really impact the bottom line.
Absolutely. You
Yeah.
got to be thorough.
Okay, so once you've verified the income and expenses, what happens next?
Well, step 3 is where you determine the net operating income, or NOI.
Right.
This is the property's true profit potential.
Okay.
You take the verified income minus those verified expenses.
Got it. And then step 4.
Step 4 is researching capitalization rates, or cap rates.
Okay. And that helps determine...
And it helps determine a realistic purchase price based on the expected income.
Okay.
You're essentially comparing it to similar properties in the area.
Right, so you're making sure the asking price aligns with the
Exactly.
potential income.
You got it.
And finally, step 5.
Step 5 is calculating your return on investment, or ROI.
So this is where you factor in financing costs.
Yes, and you see if the actual profit aligns with your goals.
The moment of truth.
Exactly.
Okay, so let's say everything checks out. The
Yeah.
numbers look good. The ROI is solid.
Okay.
Is it time to jump in with both feet?
Well, not exactly. It's more of a calculated step forward.
Okay, you've got me intrigued. Tell me more about this commitment stage.
Well, you start by securing the property with a letter of intent.
Okay.
Think of it like a pre-contract outlining the key terms.
Okay.
And then you move swiftly to a formal purchase agreement with your attorney's guidance.
So it's official, we're in the game,
Yeah.
but I have a feeling the next stage is where things get really intense.
You could say that.
The due diligence phase.
Due diligence is all about uncovering everything about the property, the good, the bad, and everything in between.
Oh, yeah, like those surprises McElroy talks about.
You remember the one where he found an M16 in an apartment during a walkthrough?
I do.
You never know what you're going to find.
That's crazy.
So yeah, meticulous on-site inspections are crucial.
So you're saying it's essential to have your team of contractors, inspectors, and property managers involved.
Absolutely. You want to know exactly what you're getting into.
No hidden skeletons in the closet.
Exactly.
And once you've made it through the due diligence phase.
Then it's time to focus on developing a solid property management plan.
Okay, so this covers everything from maximizing income to minimizing expenses.
Yeah, and setting clear procedures for rent collection and evictions.
So that sounds like a lot to juggle, but it's obviously crucial for long-term success.
It's the key to a smooth operation.
And what about those investors who are planning to eventually sell the property?
Good question. If selling is your ultimate goal, then you want to focus on managing for sale.
Okay, so that means...
That means maximizing the property's value for future buyers.
Okay, so we're talking about sprucing things up, making repairs, maybe even adding some upgrades.
Exactly, but it's also about maximizing income potential,
Okay.
maybe strategically raising rents as leases expire,
Right,
and
right.
streamlining expenses to showcase the property's profitability.
So it's about making the property look good,
Yes,
but also demonstrating its earning power.
exactly.
And I guess that leads us to the question of,
Yeah,
do you handle all this yourself or do you hire a professional?
that's a great question and a perfect segue into the next part of our deep dive.
Ooh, stay tuned, folks.
We'll be exploring the world of property management in all its glory.
Whether you're a DIY landlord or you prefer to bring in the pros, we've got you covered.
We'll break it all down for you.
So grab your notebooks and get ready for part 2.
It's going to be a good one.
We'll see you soon. Okay, so we're back and ready to dive into the nitty-gritty of property management.
Yeah, this is where the rubber meets the road.
Now, I have to admit, the thought of becoming a landlord and doing everything myself is a little...
Oh, yeah, it can be a lot.
Yeah.
It's not for everyone.
So where do you even begin?
Well, McElroy talks a lot about the importance of systems.
Okay, system.
Having those clear systems in place is crucial for smooth property management.
So whether you're DIYing it or overseeing a team, you need those systems.
Exactly. It's about being organized, efficient.
Okay, so what kind of systems are we talking about specifically?
Well, think about it. You need systems for everything.
Okay.
Advertising and marketing to find tenants,
Right.
screening those applicants, handling maintenance requests, dealing with emergencies,
I mean-
rent collection accounting, managing those operating budgets.
Wow, that's a lot.
It is, but when you break it down into manageable systems, it becomes much easier.
Okay, so let's start with marketing then.
Sure.
How do you make sure your property stands out in a crowded market?
Well, it all starts with knowing your target audience.
Oh,
Who are you trying to attract?
right.
Once you know that, you can tailor your marketing efforts accordingly.
So it's about meeting those potential renters where they are.
Exactly. McElroy talks about using a variety of strategies, traditional ads, signage, online listings, even partnering with those local apartment finder services.
Okay, so casting a wide net.
Yeah, you want to reach as many people as possible.
But once you've got their attention, how do you choose the right tenants?
That's where tenant screening comes in.
Okay.
This is absolutely crucial. You want to make sure you're bringing in responsible, reliable people who are going to pay their rent on time
Right, of course.
and treat your property with respect.
So no more Mr. Nice Landlord.
Well, you can be nice, but you have to be firm and consistent.
So what does a typical tenant screening process look like?
It usually involves background checks,
Okay.
credit checks, verifying employment and rental history.
So you're getting a full picture of their financial stability and their track record.
Exactly. You want to minimize your risk as much as possible.
Are there any red flags that would make you say, nope, not this tenant?
Oh, yeah, definitely.
What?
Inconsistent employment history.
Okay.
Evictions on their record, a low credit score.
So things that would
Yeah,
indicate...
potential problems down the road.
Right. Okay, that makes sense.
McElroy actually tells a story about a tenant who turned out to be a convicted sex offender.
Oh, my God.
Yeah, it's a real reminder that you can never be too careful.
Wow. That's scary. Okay, so let's say you found the perfect tenant.
Right.
They've moved in. Everything's great.
Yeah.
Now it's all about collecting that rent, right?
Exactly. Rent collection is the lifeblood of any rental property.
So how do you make sure that process goes smoothly?
Well, McElroy emphasizes setting clear expectations from the start.
Okay.
Make sure your lease agreement spells out when rent is due,
Right.
how it should be paid, and what happens if it's late.
No room for ambiguity.
Right, you have to be firm and consistent.
So don't let those late fees slide.
Exactly, those fees are there for a reason.
Okay, and speaking of consistency, what about maintaining the property itself?
Right.
Things break, leaks happen, appliances go on the fritz.
Yeah, that's part of the game.
So how do you handle all of that?
Well, this is where those systems for handling maintenance requests and emergencies come in.
Okay.
You need to have a reliable network of contractors and vendors on hand.
So you're saying it's better to be proactive and have those relationships in place before you need them.
Absolutely. You don't want to be scrambling to find a plumber
Right.
when there's a burst pipe.
Yeah, that makes sense.
Responding quickly to maintenance issues is essential for keeping your tenants happy and avoiding bigger problems.
It's all about minimizing those headaches. Okay, so what about the dreaded eviction?
Yeah, nobody wants to go there.
But sometimes it's necessary.
Right, sometimes it's unavoidable.
So how do you handle that?
Well, McElroy devotes a whole section of the book to this.
Okay.
He emphasizes the importance of following those proper legal procedures.
Right.
It can get complicated, so you need to make sure you're doing everything by the book.
So it's about protecting yourself legally.
Absolutely.
Okay, so far we've been talking about the DIY approach to property management.
Yeah,
But what about those investors who decide that's just not for them?
I get it. It's a lot of work.
It is.
And that's where hiring a professional property management company can be a game changer.
Okay, so you're basically handing over the reins to experts
Exactly. They handle all the day-to-day tasks.
and then those headaches.
Exactly. You get peace of mind.
But choosing the right company is obviously a crucial decision.
It is. It's almost like choosing a business partner.
So what are some key things to look for when evaluating potential property management companies?
That's a great question, and it leads us perfectly into the final part of our deep dive.
Okay, so we've talked about handling property management ourselves, but now let's hiring a professional property management company.
Right. That can be a great option for investors who prefer a more hands-off approach.
Makes sense, but like you said earlier, choosing the right company is a big decision.
It is. It's a
Well,
big decision. You're trusting them with a valuable asset,
right.
relying on their expertise to protect your investment.
Okay, so what are some key qualities we should be looking for in a top-notch property management company?
Well, first and foremost, you want a company with a proven track record.
Okay.
Look for evidence that they've successfully managed similar properties,
Okay.
ideally in your target market.
So I should be asking for references,
Yeah.
checking online reviews, that sort of thing.
Absolutely. Do your homework.
Okay, and what about those horror stories you hear about unresponsive property managers?
Yeah, communication is key.
Mm-hmm.
You want a company that's responsive, transparent, easy to work with.
So I should feel confident that I can reach them when I need to.
Exactly. And that they'll keep you informed about important matters.
Okay, communication is so important in any business relationship.
Absolutely.
Now let's talk about fees. How do you know if a property management company is charging a fair price?
Well, fees can vary widely.
Okay,
So it's important to compare apples to apples.
right.
You want a company with a clear, comprehensive fee structure.
Okay.
No hidden surprises.
And I guess you also want to understand exactly what services are included in those fees.
Exactly. Sometimes a slightly higher fee can be worth it
Right.
if it means you're getting exceptional service and peace of mind.
So it's not just about the cheapest option.
Right.
It's about value.
Exactly.
Okay, so even with managing the property, I'm still the owner.
Of course.
Do I still need to be involved at all, or can I just completely step back?
Well, it's a good idea to stay informed.
Gotcha.
You want to be updated on important matters like tenant issues.
Right.
Maintenance needs financial reports.
Okay, so it's about finding that balance between delegation and oversight.
Exactly. You're trusting your management company,
Right.
but you're also keeping a watchful eye on your investment.
So regular communication is key.
Absolutely. Establish clear expectations from the start.
Okay.
And don't hesitate to reach out if you have any questions or concerns.
Got it. Now let's shift gears and talk about managing for sale.
Okay.
This is where we start prepping our property to attract those top dollar offers.
Right. It's like staging a house, but on a larger scale.
So we're talking about making repairs, sprucing things up,
Mm.
maybe adding some upgrades to boost curb appeal.
Absolutely. But it goes beyond just aesthetics.
Okay.
You also want to maximize income potential.
Okay, how do we do that?
Well, McElroy talks about strategically raising rents as leases expire
Okay.
and streamlining expenses to showcase the property's profitability.
So it's not just about making the property look good. It's about proving it's a moneymaker.
Exactly.
Wow, this has been a whirlwind tour of real estate investing.
Yeah, we've covered a lot of ground.
So as we wrap up here, what are some of the biggest takeaways you want our listener to walk away with?
I think the biggest takeaway is that success in real estate investing isn't about luck.
Right.
It's not about having a ton of money either.
So what is it about?
It's about preparation, strategic decision-making, and proactive management.
So whether you're just starting out or you're a seasoned investor,
Yeah.
there's always more to learn.
Absolutely. This deep dive has given you a taste of some key concepts,
Right.
but it's just the tip of the iceberg.
And even if you're not ready to jump into investing right now, you can still apply a lot of these principles.
Yeah, absolutely.
Like McElroy's research and valuation techniques to your own city or town.
Right. Start thinking like an investor.
Exactly. You pass apartment buildings every day.
Yeah.
Start looking at them with an investor's eye.
That's a great way to start.
This deep dive has been incredibly insightful.
It's been a pleasure.
And to our listener, remember, this is just the beginning of your real estate investing journey.
Yeah, there's a whole world out there.
So keep exploring, keep asking questions, and never stop learning.
Happy investing.
Happy investing.